Welcome to Venture Podcast, presented by VNTR, the world's leading investors community, the place to learn from VCs and capital allocators.
In addition to having sort of that CTO type of role, of re-architecting all their systems and doing all the advanced technology projects in my group, the portfolio managers would have me come over and they would have me sit down and listen in on the IPO roadshows from the various tech companies. And it was kind of nice to get the thumbs up or the thumbs down, opinion to those portfolio managers. Again, businesses got to justify purchasing the software. They need a business case about how they're going to increase revenue, decrease OpEx, shorten timelines, all of those sorts of things. You got to have metrics so that the company can justify spending money on the software to get a return. It's just the same return on investment that you think of for investing in software companies.
Hey guys, welcome to VNTR podcast, and today we are hosting Neville Teagarden. Neville is joining us from Denver, Colorado. Neville is general partner at AI Capital. Welcome, Neville. Please introduce yourself and share some background about yourself.
Thank you so much, Yuri and Nico, for getting me involved with this. Well, my background goes back quite a number of years in AI. I started off at MIT in the AI lab and then moved on to doing some consulting and building AI systems, and then went to the dark side, so to speak, and became a corporate executive rather than a researcher and scientist. But long career in AI, and then had an AI startup that I successfully exited. And now I'm a venture capitalist investing in AI software companies.
Amazing. So you started doing AI when it wasn't sexy, right? So why did you choose this path? Like you started when it wasn't called AI, I think.
Actually, it was. I was in the MIT AI lab where Minsky was, and he was one of the 5 guys that met in Dartmouth in 1959 and coined the term. So, but it wasn't until the 1980s that I was in the AI lab. So, and I thought it was sexy at the time. I took a couple of classes, and then I actually just sort of happened onto it. I liked the field, but one of my fraternity brothers mentioned that Texas Instruments was launching an AI group, and that they were having difficulty finding folks that were kind of commercially oriented. Lots of researchers, lots of scientists. They like to be in the labs and things like that. But TI needed people who wanted to be out in front of clients. And so even as an undergrad, I got started. He referred me over because he'd had an internship at TI. So I started flying all over the East Coast and working with TI's various clients.
And how was it back when you started? What was the AI of that time?
Well, we had to be a lot more careful about the technology and the computing platforms we were working with. We had very specialized AI workstations that had entire operating systems built around building AI systems. First of all, to optimize performance. And then we were using a lot of rule-based systems, expert systems in that era. But we also did a fair amount of computationally intensive stuff. You just had to be really careful again. So we did neural nets, which are now machine learning and deep learning, a lot of semantics work with large-scale semantic networks. So we touched on all of the major technologies of today. We just didn't have as much compute power, so we had to be much more sophisticated, I guess, in the way that we use the technology to make it work.
And so you kind of were in large corporations for a long time, and you were chief information officer. So how did you kind of transition from being a researcher to lead big corporations' information systems or like strategy?
Yeah, well, my first transition into corporate world was with Janus, mutual fund company, and they were experiencing explosive growth, and they had just hired their first senior technology guy. And he brought me in as his right-hand person to re-architect all their systems for that growth. And given my advanced technology background, we ended up also doing a lot of data analytics and big data projects around our marketing. So I had that in my group. And so that was my first transition. Then I became sort of that top executive, the chief information officer, at my subsequent other positions in the Fortune 500. And that ended up being a great introduction to not just being in the trenches, implementing AI systems into corporate environments, as I had done with my consulting firm and with TI, but also the senior level executive view on how any technology system, including AI, gets adopted, how it's licensed, how we pay for it, how we justify the investment in the software in order to get business value for the corporations. All of that element plays.
I suppose at some point you were in charge of also corporate development and acquiring startups, right? Like, or you grew mostly organically with internal products. Like what was?
We did both that, acquiring software as well as building our own. I think what's really interesting is I had kind of a dual role at Janus. In addition to having sort of that CTO type of role, of re-architecting all their systems and doing all the advanced technology projects in my group, the portfolio managers would have me come over and they would have me sit down and listen in on the IPO roadshows from the various tech companies. And it was kind of nice to get the thumbs up or the thumbs down, opinion to those portfolio managers. Oftentimes, though, I'd give a thumbs up that you should buy it, even though we wouldn't buy it ourselves for our technology. Because the thing I used to always tell them was, you can sell it tomorrow, but I got to live with it for 3 to 5 years.
And you mentioned that you went to do your own thing, your own startup, and exited that successfully. Can you tell us a little bit more about that and how you got started and how it went?
Oh, yeah. So I'd had the 2 chief information officer jobs there and had corporate venture as part of my team in those 2 jobs, not just the IPO roadshows at Janus. So I got involved with, watching startups grow, that kind of thing. All 3 of the companies I'd been with were big, but they were extremely high growth. Janus tripled in size. The other 2 septupled and grew dramatically while I was there over 3 or 4 or 5 years. So I was used to high growth environment. I've been exposed to startup companies. I had started my own consulting firm with some other partners. And so I went back to my roots of AI and my roots of, building up an AI software company. So that was a great transition, and we did really well. Always a challenge. You learn the ups and downs and the ins and outs, and wear a lot of hats. But it's
did you raise capital for this startup?
Yeah, we raised about $22 million over the course of my tenure there. So we had some substantial capital invested into the company.
Amazing. And at what stage you decided that you want to be an investor? Did you invest as an angel while you were CIO?
So, we were investing at seed and Series A and our corporate venture arms and that type of thing. What I ended up doing, though, going into venture capital on my own with my firm, was basically realize that there was a significant opportunity in a segment that was being overlooked. In 2015, 2016, when we got things going with AI Capital, everything was about the platforms. The AI platforms that were eventually acquired by all the big tech companies. There wasn't so much about how do we really use this in products as opposed to building our own in major corporations. So the early adopters could afford to build, but smaller corporations, the mass deployment of it needed to be with packaged products. And so, through the internet and mobile era, a lot of venture capital went heavily consumer oriented, kind of lost their DNA for business oriented software companies. And there was an opportunity for us to take that lane and do something with it.
So you had an exit and you kind of decided, okay, I will transition to be an investor. So how did you define your investment thesis? Like, did you consider to investing in something that is not AI, or it was like right away, okay, I'm an AI guy, I invest only in AI?
Yeah, well, there's an old adage in investing that you invest in what you know. That's a Peter Lynch philosophy, and I think it applies today too. So I stuck with AI because I saw that opportunity, that lane. One of my other strategic investors in my AI software business, their executive champion of the investment was a close friend, another MIT guy. And then I had another friend who was a Goldman Sachs alum. And basically with that kind of team, we were able to kind of dig in, figure out where we were going to have what we thought would be our best opportunity. We knew business AI software. We landed on avoiding angel and seed rounds. We wanted to be in the gap where the growth was taking off. We wanted to be able to do follow-on investments. My other co-founder, Josh, had some great access to a lot of raw data about venture capital performance. And that turned out to be, one of the keys is to be able to do follow-on investments to protect your position. So we did a lot of financial engineering on this, both, Josh, Zane, and I, all of us kind of came together and did a lot of research before coming up with our investment thesis. And it's basically early growth stage, bridge to a Series A or a Series A round, enterprise AI software. And that's what we do.
And you mentioned some data analysis and financial engineering. Would you say that is the foundation of how you invest and make decisions, or is it just another tool in your toolkit, would you say?
Yeah, you gotta have to say your volume's a little bit low. So maybe you can bring that up a little bit, but I think you're just as, focused on enterprise AI software. And yes, that's correct. We go after enterprise AI software. One of our secret ingredients in our whole thing is the fact that I've been a chief information officer, and we've got some other former corporate execs who kind of know, why do corporations buy software? How do they buy software? What matters to them? How do they justify the purchase of the software? How does the sales cycle evolve, and what are the signals that you're going to get the sale or not? So we spend a lot, and what are the revenue models that are going to fly, for these guys, and how is that revenue model going to scale to generate more revenue? How are you going to cross-sell in the industry between corporations? So we apply a lot of that discipline that we understand from our backgrounds to understanding whether an investment into a particular enterprise AI software company is going to do well or not.
You constantly mention team members, right? Kind of, how did you guys get together, and how did you choose who to partner with? Like, what was your journey in building your team?
Yeah, well, when I started up my AI software business, we needed a very strong consulting partner to help deploy our products. And I reached out to a consulting firm that I had previously recommended as an investment to Janus, and said, hey, can you guys help us out with the consulting side of this? And Josh Sutton, who's a co-founder, was at Sapient. And so I got introduced to him as an MIT alum too. And we formed a great partnership with the software business, and that carried forward to him wanting to join in with the firm. Zane was a well-reputed Goldman Sachs investment banker. locally here in Denver. We knew we needed that capability as well. And so the three of us got together then in that 2015, 2016 timeframe to formulate the investment thesis, get ourselves going. So that was the original team. Now, our first fund actually had a unique structure to it that actually enabled us to further build out the team. And the team you see today is all because we had a model that enabled us to bring on additional team members as we scaled.
Do you have a typical check size or a typical round that you invest in?
Yeah, we stick to the earliest is like a bridge to a Series A, so sort of seed leading into an A, but it's got to be post-revenue. They got to have shown that they've actually got something that a corporation will buy before we get really interested. We'll track them. We'll provide as much advice as we can during the angel and seed stage of these guys, but we'll put our money to work at that bridge or actual Series A round. So we focus in on that. We like that as the best opportunity for us.
But is there a lot of AI in that stage, or it's mostly application layer with a future AI application?
No. I mean, there's a lot of guys that have very industry vertical specific AI technology. It solves a particular problem for a business. Again, business has got to justify purchasing the software. They need a business case about how they're going to increase revenue, decrease OpEx, shorten timelines, all of those sorts of things. You got to have metrics so that the company can justify spending money on the software to get a return. It's the same return on investment that you think of for investing in software companies. And so with that in mind, that's our key.
And in terms of investments, you've been around, your fund's been around for 8-9 years now. Have you seen some good success stories during that time?
Well, we've got 8 companies in the first portfolio of the first fund. And we got one winner that exited already. We've got one that was just kind of a push, which you're naturally going to have in an ABC. But our hit rate's pretty good because the other 6 that are still operating, I would say 2 of them are in sort of moderate growth. But the other 4 are kind of hyper growth right now. They're really doing well for us. So, our decision to go after, bridge to Series A rounds, and when they've got some proven track record, when they've got metrics around how they improve the business, all of those elements, the metrics around their improvement are huge because the AI is delivering that value. All those elements are at play with those other 4. So we're expecting some really good things out of those.
So when you started the firm, was it hard to raise funds given your very big experience in enterprise software and AI? What was the journey to raise your first fund?
It's always hard raising capital. It doesn't matter whether you're a venture capital firm or an actual operating company. It's all about networking, meeting people, having something unique and interesting, and telling the story. And people look for track record. It's tough with emerging managers. Even the emerging manager programs you'd expect would be a little easier, and they're really tough too. And that's really kind of ironic because, again, the stats that we had when we were originally formulating our investment thesis, you got to be your first, second, third vintage funds dramatically outperform, status quo, mature venture capital firms dramatically. So your risk reward curve is actually pretty much in your favor to do emerging managers, I think. You just got to be ready to spread your money out, much like you do with a venture capital firm spreading their money out amongst startup companies.
So what was your approach to raise your first fund? Who did you reach out first? to lock the capital? And what advice you would give to emerging managers that are raising funds right now?
Yeah, well, it was a lot of friends and family. Fortunately, because of our background in corporate world, Wall Street, and and Wall Street contacts and things like that, we had a pretty good list of contacts we could reach out to. But we set the minimum investment low. We started with a small fund to prove and validate our investment thesis and build the team. And then you just wait for the results to start showing up, wait for investors to start getting comfortable that you have stability in the team, all of those sorts of things. And at that point, you've got a much better story.
And as someone who's been in AI for decades now, you talk about enterprise software being exciting, but is there any particular area or niche within that excites you the most?
Well, the thing we find, there's kind of two angles that I really like. When it's a hybrid system that incorporates multiple techniques, AI techniques, to solve the problem, those blended solutions tend to reduce the risk of all kinds of bias issues and hidden issues that you got for risk mitigation purposes. So we really like when the AI technologists have more than one tool in their tool drawer to solve a particular business problem. The second area, we've got some industries that we like as well. And that really is two clusters. There's the health side, health tech side, between healthcare, life sciences, and pharmaceuticals. And then the other cluster we like are the core industries. And that includes food supply, energy and natural resources, manufacturing. And then we always pay attention to the supply chains behind those core industries and any optimizations in the supply chain. And we also like the data side that underpins the technology. So support the supply chain for the technology and the supply chain for those industries.
And how do you support your portfolio companies in these niches? Right? Do you have a strong network? Do you open doors? Like what is your approach with those companies you deploy to?
Yeah, I think it's our access to the research labs and to the incubators and the think tanks and those types of things in the AI world has been really helpful for them. Plus, our own team has had years of experience in the AI world. And, I can even go back to stuff I used to do 20, 30 years ago. And I'm like, I did that before. You go try that out and see how it works. Even with computers going much, much faster, so there's a lot of experience around, kind of what has worked, what hasn't worked in the past. It's always fun when someone figures out what they didn't know along the way. And, we're nice about it in the end. So that's another thing. And then, given our corporate backgrounds, we do have networks in those industries to corporate execs that we can help out to find that anchor customer or two or three or expand in an industry and know how to get to the other executives in the industry, even if we don't particularly know them. We know the way to get to them and the techniques to use, so we can provide that as well.
So when you choose a team to deploy into, what are the criteria for you to choose the right team? Because, a lot of startups, they have different mindset than enterprise, right? Okay. So are you looking for guys that work in enterprise, know how to sell to enterprise, or, it could be entrepreneurs that, chose that client as a target?
Yeah. So to define the value proposition for the company, we typically find at least one of the executives been in the industry. They know how the industry operates. They know where the challenges are. They've spotted the challenge that they're going to solve. And after that, they got to be able to find a few key technologists AI software tends to be relatively small teams when it's solving a particular problem. So the team doesn't get crazy big, and it's this core team plus this guy who knows what the problem is and how to solve it, and they go after it. So these companies are relatively small, very concentrated and focused. We like to see that they're concentrated and focused. But they need to also pivot to the opportunity, because sometimes their original idea isn't exactly where it is, and they need to have that pragmatism and flexibility to maneuver to the opportunity and then tell the story in a way that the corporation can justify that software purchase.
And in terms of looking at deals, deal flow, how do you do it? How do you find the good deals to invest in?
Like I said, we've got our industry connections in the target industries with the executives. Once you're in that space and you're participating in the dialogue, then you start seeing things happening. Because it's usually kind of hidden down under. It's not like the tech industry is all concentrated in Silicon Valley. These opportunities are scattered in distant parts of the planet, even, unusual places. So incubators and think tanks, they're sitting in local communities, tapping into the angel and seed networks in those local communities where they top out, and we can step in then and do that next investment after the angel investors to, get them through the gap and get them into high growth as opposed to just a good idea with a minimum viable product. That's the place where we go. So we have our network of our LPs who are in the angel and communities, incubators, research labs, tech transfer programs at major universities where our teams have been. That's all deal flow for us.
So there is no geographical focus in a way, right? The company could be anywhere, or you still prefer US-based companies?
Yeah, fund by fund. Right now, our fund that we're launching is going to be pretty much 3/4 North America focused. And then we got a quarter that's discretionary, could be North America, but could be rest of the world. And then we're anticipating launching another sort of European-centric fund. But again, about a quarter of it will be discretionary for rest of the world as well.
It's kind of, do you see that enterprises are ready for AI, or like or they are coming to you and saying, hey, like AI is cool now, we need solutions. What do you see in the market in terms of enterprise readiness for AI? And, everyone says that if you are not applying AI, then you're going to be, out of business soon, right? So your competition will outgrow you.
Yeah, well, the early adopters have already adopted. They're willing to build and invest in hiring tech talent to build systems, those kind of things. The mass adoption stage is real early now. And so we're early in that mass adoption, which means that the groups are having a hard time figuring out, because they're stuck in, oh, wow, I got to buy and build these teams, and I got to figure out the software and which software platform I should use to develop my custom apps. And what you have to do is get out there and show them, no, you can buy a packaged app that has some AI components to it that solves a particular problem. You need to adopt this. And so that's the stage you're at. You got to kind of show them a packaged thing that makes it easier for them to make the leap. Because the other key here is justifying the purchase. Buying a platform, it's really hard to come up with provable metric around how you're going to improve the business. But if you got a packaged app that solves a particular problem, they can say, well, these other two companies, they got 30% improvement in throughput for their manufacturing by adopting our software. Well, that's an easy one to justify.
And what do you say about all the big guys like Oracle and Google and Amazon? They offer AI solutions and infrastructure. Do you see them kind of creating specialized AI offerings to the corporate and enterprise world?
Yeah, if past performance is indicative of future performance, which it isn't in finance, but in corporate world. These guys are good for the Fortune 500. They're really big companies, and they have the platforms. But oftentimes it takes another company, a smaller company that's focused on an industry, to take those tools and take them to that industry. And so there's lots and lots of growth for the big guys. But for them to really narrow in, it's not a big enough market for them to go after a particular industry oftentimes. So the small guys can find the opportunities customizing for that industry.
And that's the aim of the game, right? When you're small, you can only really focus on a small problem in a particular kind of niche.
Yeah, and still build a really, 9-figure TAM type business. And we can get in at a low enough valuation, even at Series A, for something that's got a narrow focus, that a high 9-figure TAM, we don't have to have an angel. We don't have to have a unicorn. We can do high 9-figure TAMs, and wow, that's a great opportunity because we'll make great multiples on our invested capital from that.
Most of your deals will exit through M&A, I suppose, or you do look for unicorns as a thesis.
We don't look for unicorns; they just happen to appear sometimes. And I think the unicorn hunting stuff gets venture capital firms into trouble because they get very, very concentrated, and they gotta have the one unicorn to just make the fund. And in our case, our dispersion of returns is much more conducive to de-risking the investment.
And go back to your AI days a few decades ago. But what was just give us an idea, what was the first kind of AI thing or AI use case, just so we can compare it to the ChatGPT stuff that we see these days?
Oh, well, there was manufacturing systems that helped with statistical quality control and, keeping manufacturing and production lines up and running efficiently with minimal downtime. That was one of the systems that I built. Had another one that was the allocation of a limited run of clothing, designer clothing, allocating that out to particular retailers. And there were some interesting decisions they made about which retailer got the best allocation versus others. Did a lot of things with insurance underwriting, life insurance underwriting, those kind of things. There's just a lot of different things. Configuration was a big thing. So the configuration of different technology hardware and how you had to put the cards into the machine to do a particular function, and where you had to do it and how much power you needed to make it work that way. Those were classic problems, diagnostics of problems, configuration of equipment.
So if you would use the tools that are available today, like ChatGPT or Anthropic, or would it make your life easier? Like, would you use these models to solve these use cases?
Actually, those models are a little different. The analysis side could be, but I think the configuration is not really a ChatGPT type of application. There's probably some machine learning and deep learning that you could use to build up models to do configuration, but not. Those particular types of applications would be tough to do with ChatGPT. There are some natural language, dialogue systems that we did for customer service that ChatGPT could do very well.
But it's the quantitative kind of machine learning side of things which ChatGPT just isn't built for, right?
Yeah, there's a lot of sort of common sense knowledge in the world that is way more abstract than the way ChatGPT does what it does. And from that standpoint, how things are put together and taken apart and built up or torn down in order for configuration, for example, that type of thing tends to be much more semantic based.
Yeah. So you mentioned before that you get excited by investing in healthcare. So just wondering which part of healthcare, is it the administrative side or kind of the more consumer touching side?
Yeah, actually what's really interesting there is I love the data side of that world. Getting access to patient medical records and again, de-identified patient medical records and genomic sequencing data, and being able to feed that into machine learning and deep learning models for drug discovery, for example, or for better allocating and program managing national healthcare initiatives. Those kind of things are really interesting from that standpoint. So, figuring out, we have a high propensity of folks with risks of osteoporosis, for example. And so if we can find that in our data, machine learning wise, and then begin taking national research budgets for healthcare and focusing them in on osteoporosis so that we can mitigate the costs of that care and reduce the incidence of osteoporosis for our population. Those kinds of things are really exciting.
Yeah, absolutely. Because you're making a real difference to people, which is sometimes it can feel, especially enterprise SaaS, it's, you're helping a business, but when you're helping a real person, it's slightly different, I think.
Yeah, and I think we got excited about core industries and the supply chains for the same reason. We've seen so much disruption over the past, 5 years in supply chains and delivery of goods and services to people, and the kind of pain that causes for everybody, whether it's, inflationary pressures or just pure lack of availability in those spaces. If we can help smooth that out so that those kind of headwinds don't buffet people's lives so much, that's a really good thing.
It's kind of what is the best way to get in touch with you for a startup? Do you accept cold outreach from startups, or you tend to focus on referrals from your peers? What is the best way?
Yeah, we tend to just focus on referrals from peers, but we do have our info@aicapital.com email address for people to send in their decks and have us take a look at it. Those kind of things. So it's personal referrals to us. Plus, we do take some, and some people reach out to us on LinkedIn as well on occasion, and that's kind of mass market. We tend to find much more curated deals from our network.
And do you lead rounds, or you follow as well?
We tend to lead rounds and take board seats in that seed stage. Yeah. And we do offer co-investing to our LPs. So, we typically do maybe half of a round, maybe 2/3 of a round. And then, from there, our LPs get an opportunity to drop some money in and take some direct exposure through an SVP.
Do you invite other VCs to co-invest, or it's mostly you and your LPs?
If they're an LP. You see, this is the funny thing I find about most venture capital. A lot of venture capital firms reach out to us and say, hey, let's share deals. And the issue is I have a contract with my LPs that says they get first looks. Mm-hmm. Well, if they get first looks, they're going to get all the best deals. And people going around asking, let's share deals, they're going to see the deals that have been passed over. It's a really bad way to do it, I think.
What about those that raising follow-on rounds? You probably tapped out, you cannot follow.
At that point, yeah, we'll invite some VCs in on follow-on rounds. Yeah, if we've got excess capacity, but so far our LPs have been really interested in the deals that we have and doing the follow-ons too.
And you're in Colorado right now. Is that where you're from? Where did you decide to move there?
Well, I actually grew up in South Dakota. I think that is part of the DNA of the firm too. Most of us grew up in kind of out of the way places. And so we're kind of fond of the out of the way places, and we don't mind going to those places and finding the deals that are overlooked by other folks a lot of times. And then found my way to the mountains of Colorado. I like the beaches too, but love being outdoors. The skiing here is great. And the kiteboarding on the beaches is also great. So I love all that kind of outdoor stuff. Being based here, and then our team is scattered all around the U.S. right now. So we've been virtual since the first day.
And how's the ecosystem? Like, we hear good things about Boulder and Denver. It's kind of lots of startups, tech stars in Boulder. So how's the ecosystem?
Yeah. So Colorado, there's a huge amount of defense tech that's just kind of hidden below the surface. So most people don't hear about it, don't see it, but there's a lot going on in Colorado in defense tech that it's kind of quiet. For the more open sort of stuff, it tends to be a lot of SaaS. The specialized technology firm companies really aren't here, so we have to tend to look pretty far afield. Our deals are scattered all over the planet, typically, for us. So we interact a little bit on a social level in the local community, but there's just not that much deal flow for us in particular, because we're so narrowly focused. If you're more of a generalist VC, there's deals here for you in Denver.
Do you travel quite a bit then, right? In order to meet these founders?
Virtual works great for the most part. But I don't mind getting on planes to track things down. And team doesn't mind traveling either.
And how do you maintain a work-life balance? You mentioned skiing and kiteboarding. But how do you kind of, what other tips do you have for other people? Because I'm sure you work a lot, right? So,
well, you just got to get used to a very dynamic life, and you need to make sure your partner is ready for that very dynamic, flow of things. It's you work when the particular activities are there that you need to get done. Having been a former corporate exec, though, I got a great team around me. They're very senior, so they're very self-starting. And so if we need to balance things out across the team, all of us are more than happy to communicate. Just say, hey, I'm getting a little overloaded. Can I have somebody step in and help on this thing? So it's a very, very dynamic dialogue that happens across the team to balance that workload. And then I'm always very conscious about making sure my team, you need to take some time off. Go have fun. And bringing that up. We all want to live a good life and also make some great investments. One of the nice things about venture capital, obviously, is we're working on a pretty long timeline.
Do you see yourself starting another venture as an operator, or you're done with building?
I'm having too much fun with this. This is great.
Great, Neville. So we are hosting our VNTR Summit on November 13 in Lisbon, and you're planning to come. So
I understand I'll be up on stage and enjoying talking some more.
Yeah, so we are looking forward to meet you in person, and finally, after all these interactions in the past 6 months. And so thank you very much for joining us, and thank you for sharing great insights with investors and founders. See you in Lisbon soon.
We'll see you in Lisbon.
Exactly.